Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Royal Caribbean Cruises Ltd. Quarterly Report. Royal Caribbean Cruises Limited offers a diverse range of businesses and services through its three prominent brands, Royal Caribbean International, Celebrity Cruises, and Silversea Cruises. The company operates cruises worldwide with a fleet of 67 ships, providing various itineraries to cater to different tastes and preferences. The key services provided by the company include cruise operations under three distinct brands, a wide range of itineraries for diverse customer needs, operations in multiple locations around the world. The Royal Caribbean Cruises Limited stock price has experienced a significant surge of over 35.99% in the past year, with some reports indicating increases of up to 130%. This increase is primarily attributed to several key factors. Firstly, the company's consistent strong earnings and raised guidance have been major contributors to its stock price growth. Royal Caribbean Group reported better-than-expected profits for the fourth quarter of 2024, exceeding guidance, and provided a strong outlook for 2025. The company also announced robust first-quarter results for 2025, with net income doubling compared to the previous year. Secondly, strong demand and booking momentum have driven the stock price increase. Royal Caribbean highlighted sustained and accelerating demand for its cruise vacations, including record bookings during the wave season and consistently high occupancy levels. Thirdly, strategic expansion initiatives have contributed to the company's growth. The announcement of new river cruises in 2027, plans for exclusive destinations like the Royal Beach Club Santorini, and the introduction of new ships have all added to capacity growth and increased yield. Lastly, favorable macroeconomic factors, such as lower fuel costs and advantageous currency exchange rates, have also contributed to increased earnings expectations. Overall, Royal Caribbean Cruises Limited's strong financial performance, robust demand, strategic expansion, and improved financial health have all contributed to its stock price increase in the past year. Net income and profit margins. A changing landscape, the financial performance of a company has undergone significant changes over time. Net income has experienced a substantial increase, with a 42% rise from $1,115 million to $1,579 million. This trend continued, with net income increasing by 49% from $2,337 million to $3,529 million, and another 51% from $2,337 million to $3,530 million. The consistency of these increases suggests a strong upward trajectory. Profit margins have also undergone changes, albeit at a slower pace. Initially, they remained relatively stable at around 33%. However, there was a notable increase from 18.4% to 25.7%, indicating an improvement in profitability. Although not explicitly stated in some sections, the implication is that profit margins continued to rise due to the increasing net income and other factors. The reasons behind these changes are not explicitly mentioned in the provided summary. However, it can be inferred that a combination of factors contributed to the growth in net income and profit margins. The company's financial performance indicates a significant improvement in its ability to generate operating cash flow. A notable positive change in working capital of $130 million is evident, demonstrating the company's efficiency in managing its current assets and liabilities. Furthermore, the net cash provided by operating activities has increased from $3,798 million in 2024 to $4,842 million in 2025, a substantial rise of $1,044 million. This upward trend suggests that the company is successfully generating positive operating cash flow, indicating a strong financial position and ability to meet its obligations. The company's financial performance has undergone significant changes in terms of debt level and interest expenses. Notably, total debt has decreased by $579 million from December 31, 2024 to September 30, 2025. However, the long-term portion of total debt increased by $1.27 billion during this period. Despite these fluctuations, the company's committed financing for ships on order remains substantial at $8.8 billion. More significantly, interest expenses have decreased substantially from $603 million in 2024 to $248 million in 2025, a reduction of $355 million. This decline is even more pronounced when comparing the 2 years' totals, with a decrease of $599 million. These changes suggest that the company has made efforts to manage its debt and reduce interest expenses, resulting in improved financial performance. Regional Performance Review. The financial summary reveals a mixed performance across different regions. Notably, North America and Asia/Pacific demonstrated strong growth, with an 8% increase and 29% increase in revenues respectively. In contrast, Europe and other regions struggled, experiencing a 9% decrease and 23% decrease in revenues. These disparities highlight the varying market conditions and regional dynamics that impacted financial performance. Management is optimistic about the company's future prospects. The company aims to achieve a 20% compound annual growth rate in adjusted EPS by 2027 under its Perfecta program and maintain a return on invested capital (ROIC) of 17% or higher by the same year. To drive revenue increases, management will focus on capacity growth, new ship additions, and yield growth. The company is also expanding its global presence with the opening of a new destination in Mexico, Perfect Day Mexico, in 2027. Additionally, it plans to pursue additional port infrastructure developments. Management has sufficient financial resources to fund its obligations for at least the next 12 months, allowing it to consider opportunities such as building additional ships, strategic alliances, and potential acquisitions. Overall, management's strategy is centered on growth, expansion, and increasing profitability through a combination of capacity growth, yield growth, and strategic investments. The company has made significant investments through acquisitions and divestitures over the years. Notably, it acquired the port of Costa Maya and adjacent land in Mexico for $294 million and invested approximately $887 million in TUI Cruises as of September 2025. On the other hand, the company has also disposed of certain assets through divestitures. One notable example is the sale of Splendor of the Seas in April 2016, although specific details on the sale price or terms are not provided. Additionally, a loan to TUIC was repaid by Grand Bahama Shipyard Limited in September 2025. These transactions demonstrate the company's strategic approach to investments and asset management, with a focus on expanding its operations while also optimizing its financial position. The company has demonstrated a commitment to returning value to its shareholders through both dividend payments and share buybacks. In 2025, it paid out $552 million in dividends, with a declared and paid dividend of $1 per share on September 30. Additionally, the company repurchased 2.3 million shares of common stock for $655 million under its share buyback program, with $345 million remaining available for future transactions. This strategy is expected to continue, providing value to shareholders through both cash dividends and reduced share count. There are no concerns regarding inventory buildup or supply chain disruption, as indicated in the financial summary. This suggests a well-managed and efficient logistics system, allowing for smooth operations without any disruptions to the supply chain. That concludes the financial summary for Royal Caribbean Cruises Ltd. Feel free to comment below, and I will be happy to answer them when possible.